Hello, I'm Maura Carley, founder and president of Healthcare Navigation, and today I want to talk to you about Medicare income indexing, referred to as IRMA, income-related monthly adjustment amounts. And if you look at the Medicare and You book, it suggests that only 5% of Americans pay income indexed amounts for Part B, and if they're on Part D as well. But I think that's a little misleading because one-time income, like the sale of a home, affects this as well. And I've talked to enough people who were unaware of this and then sold a home, which pushed them into a higher category. They hadn't paid income indexed amounts prior to that. And that is how it's supposed to work. So I think it's worth having everyone on Medicare have some basic knowledge of how this works. So let's talk about a little background. We've discussed before that Medicare Part A and Medicare Part B began in 1966. That's original Medicare. And between 1966 and 2006, everyone paid the same for their Medicare Part B. Remember, most Americans have earned premium-free Part A. So in 2007, Medicare Part B became income indexed, and in 2011, Medicare Part D became income indexed. And originally there were 5 brackets. Now there's 6. Before then, the IRS was not involved in all of this. Now the IRS gives your tax returns to Social Security, and Social Security informs you if they believe you owe an income index premium. And let's just quickly review what we're talking about here. So we're talking about adjusted gross income from line 37 of your tax return, filed 2 years prior, tax-exempt interest income from line 8B of your tax return, and one-time only income like capital gains or IRA withdrawals. So as I said before, the sale of a residence can push you into a higher category and you'll pay higher amounts, but for just that year. So let's talk about what these amounts are, and I definitely need my glasses for that. Most people in 2022 will pay the base Part B premium of $170.10. But then amounts go up, and you can pay, depending on the bracket you fall into, $238.10 a month, or as high as $578.30 a month. So if you're a high-income person as an individual with a tax return of $500,000 or above, or a couple filing a joint return showing income above $750,000, that's what you will pay next year, the $578.30 a month per person if it's a couple. And of course, even if you make a million gazillion dollars, that will be the maximum for next year. Part D is similar, but the amounts are lower. And remember, you're paying a small Part D premium to the plan you select. But if you owe an income indexed amount, it can be $12.40 or going up to a maximum of $77. And I should just note, I mean, and we want you to look at this, that when that 6th bracket that was added as a new bracket for the highest income Americans, when that changed the system from 5 brackets to 6, the one below that became a very large category. So everyone should understand that. And of course, this can change from year to year, and does. So that's got to be factored into your planning. But we're not financial advisors. So let's talk about the exceptions. There is a form, SSA 44. You can Google it and download it if it's appropriate to you. But that is the form you would use to petition Social Security if you have a life event, and they're listed on the form. But most people that this would apply to are dealing with a reduction in their work schedule, or retirement, or death of a spouse, or divorce, something that would move your income down. So you'd be in a lower bracket. And in that case, you can petition Social Security with this form. And I think in this era, you'd want to call them and make an appointment and find out what your local office intends to do to handle these things, because pre-pandemic, most people made an in-person appointment, and that's still not available. But anyway, this is the information you supply to Social Security to ask them to base your income indexed amounts on your current projected income rather than 2 years prior. But otherwise, the system is the system. And as I said before, if you have a large capital gain because you sold a home, that may very well affect your income indexed amounts. And it's particularly alarming to people who've decided to move to a less expensive part of the country and aren't aware of this, and then are quite taken aback. But again, that is how the system is supposed to work, and a one-time hit like that should only increase your income indexed amounts for the year that is relevant. I think we've covered all we want to cover today about Medicare income indexed amounts. Thank you for watching, and I hope you have a wonderful day. Take care.